the chart. I want to see it trade up there. Look at the body, respecting it. See it? It's staying inside of that gap. Then it comes back down. I'm buying it when it's in the midpoint of it right there. I'm buying it there. And then I'm buying the low end range of it there. So I'm accumulating and pyramiding with logic. But now because we can see this low, high, lower low, that's a breaker. I'm utilizing all that framework. I'm going inside this price leg with the support of this idea as a breaker. Because this is an A to B, and this is all distortion and manipulation, I'm using that as the entry point. But I'm going back into this little short-term price leg right here. Low to high, okay? Now watch. All of this is occurring, by the way, in the 1150 to 1210 macro. Okay, it's a specific sweep period of time where the algorithm will start spooling, reaching for liquidity. But this leg here, that's the A to B on that breaker. If we take that, and we know that that buy side liquidity is on June 16th, 2023 high, the daily candle, it's drawing up into that, and maybe even as much as the weekly volume imbalance. So we have this range right here, but now we have 3 standard deviations, 4 standard deviations, 5 standard deviations, 6, 7.5. Where does 7.5? Now, if I show you 6.5, that's right at that old high. You see that? 4493.75. That right there tells me that will definitely reach for that liquidity. Remember, 4493.75 is the high of June 16, 2023. What I'm doing is I'm showing you how to take the levels here for standard deviation, and when they agree with a range of liquidity, what do I mean by that? If we look at how the negative 6.5 standard deviation comes in at the daily high at June 16th. We have an expectation that the market will reach up into the liquidity above this high at 4493.75 to this range up here, which is the weekly volume imbalance. So in that range right there, okay, if we take that range and use all the breakers or any standard deviation idea or approach to look for targeting, you want to see a confluence of levels anywhere in that range. So if we anticipate 4496.50, which is based on that A to B price leg here to here, that's where we got that from. So we have that level, then we have 4495.75, and in one, qualifying and confirming that the high on the 16th of June 2023, that is in fact going to be reached for. How far above that level? Well, 4495.75 is a good level, and 4496.5 is a good level. So any one of those two price levels is a good price point to exit.